Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Costco, the big winner, one of the big winners in the retail space here. Megan, we get monthly metrics from Costco on same-store sales. Those have been over 7%. They raised their membership prices last year. Everything seems to be going right for Costco. Do you have the data that supports it? Because we're starting to see some cracks in consumer sentiment and confidence data.
Yeah, whenever we look at Costco, our data looks pretty strong. A lot of this, Costco has so many different tailwinds that are driving this growth. As you mentioned, it increased its membership prices for the first time in 7 years last September. And so it will continue to reap the benefits of that move for the coming months just because of how that renewal cycle looks. But Costco is also doing a really good job expanding internationally. A large portion of its new store footprints are going outside of the U.S., and that's an enormous untapped market. And then we also see just really high levels of consumer sentiment. It's pretty interesting that consumers are willing to pay this membership fee just to be able to enter the doors to shop and spend more money. And this chart, I think, is really important for Costco moving forward. This is an indication of that digital sales momentum. And this is an area where Costco is expanding. Right now, I think digital sales account for 6 to 7% of total sales. And so there's a large growth opportunity here. And you can see on this chart, Costco digital visits are up by about 6% year over year. This is actually an acceleration. If you look at this on a 90-day moving average, they'd be up by about 2%. And on a 30-day, so just in that last month, those visits are up by 6% year over year. So it's nice to see that continued expansion there. And for us, when we look at Costco, as you mentioned, they do report monthly, so it takes a bit of our edge, but we aren't seeing that pullback or that hesitance from the consumer. We see consumer mentions and searches for new memberships actually rising on a year-over-year basis. We don't necessarily see signs of cancellation or churn, and it's nice to see those digital metrics continuing to tick up. So yes, Costco certainly has a very, very high bar, and there's a bit less uncertainty when it comes to its overall results because of those monthly updates. But our data suggests that the consumer, at least the Costco consumer, is still strong.
Megan, this company has mastered the art of simplicity and their ability to generate cash flow, to keep expenses, to keep debt minimal, to raise prices and still retain about 92% of their customers. They only mark up something 14%, which is basically the cost of the product plus their fixed cost. They make the majority, the lion's share of their money off the membership fees, and they just raised membership fees. So that's going to start showing up on the bottom line. It seems like every article I read is so incredibly favorable on Costco, but they all think the valuation is starting to get a bit stretched. So what do we do about that, right? How do we deal with a company that, it's not in your area to understand that all this good news may have already been in the stock? How do traders look at a name like Costco that's got so many things going for it, but the price of the stock is very expensive?
Yeah, I think I've seen a lot of those mentions too. We look at investor sentiment. We see investors who are saying this is a company that's priced like a growth stock. Should it be? And so I think that that's a valid question. But when we look on the consumer front, we look for these signs of weakness and the cracks in Costco's armor, and we just can't find them. And so this almost reminds me, yesterday, we were talking about Kroger, and I said, there's a lot of uncertainty and there's some reasons to be cautious, but our earnings score was bullish, and it looks like that was the right move. For us, when we look at Costco right now, our earnings score is exactly the same. It's a positive 31. So from the consumer front, we see strength, and we see this as a company that is courting the upper percentile of consumers, a bit of the higher earners that are able to pay that membership fee and that continue to return because they're finding value. And so I think that this is kind of in an elite class of companies in our universe. But the point that you make is very valid. You know, the bar is extremely high. The stock has performed really well, really since COVID. And so I think that this is one to, you know, on the consumer front, yes, things look really strong, but there's certainly some room for caution.
Yeah, and we looked last quarter, another blowout quarter. The stock fell for about a week and then turned right back around, went to fresh all-time highs. We pulled back here just a little bit, about 4% from those all-time highs. But Megan, you know, I kind of wanted to hit up more on that, you know, the reaction that we saw at Walmart after a really good report. But they did start saying that the consumers kind of pulling back here a little bit. They do have the membership fees, which is about half of their operating, you know, income at this point. So that's, you know, there's no risk to that with over 90% retention rate. But are you guys seeing anything across the board in retail that might say, okay, it's a frothy valuation where, hey, our earnings score is kind of reflective of good data, but at the same time, there are cracks in that perhaps?
Yeah, you know, whenever we look at this, especially versus a Walmart, I think the key here for us is this is something that Andy and I were talking about recently, is the companies that are performing really well and that it seems like their stock continues to push higher are those that are courting those higher earning consumers. We saw this out of a strong result from On Running, which is a tough compare to Costco, but I hope you can kind of see where I'm going with this. And we think that Costco is courting a very different consumer than Walmart is courting. And part of that is what insulates us, and part of that is likely what's pushed the stock so much higher. But we do think that Costco has a lot of other growth levers. I think that it's e-commerce expansion and digital adoption, and that's a major growth lever. But there is certainly some uncertainty. You know, this isn't a sure thing. While our data leans bullish, we certainly don't know how the stock will react tomorrow. But if investors are worried that there's a weakness in consumers, we don't necessarily see that weakness coming through in the month of February. On all of our data points, at least, it looks like the consumer was pretty resilient, or at least the Costco consumer was pretty resilient over the last month.
Yeah, you wonder if it's like that Walmart where in recessions it does well, in growth times it does well, just because of the impact of the membership fees and the loyalty from the consumer. All right, great stuff, great data as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research at LikeFolio. Kev, you look at this one, you mentioned the valuations. I was doing